Hello everyone, welcome back to another interesting video on daily market analysis and stock updates. In this video, we'll be discussing about the three major important updates from SpiceJet and ITC and Jefferies report on India's economic transformation. We will discuss the complete details in this video. SpiceJet has secured an additional 316 crore rupees funding. We will discuss the complete backdrop details. We will also discuss about ITC's 47% stake in Prataap Snacks. We will discuss the complete acquisition details and we will also discuss about the Jefferies report on India's financial transformation and growth and projections. So without any hesitation, don't forget to like this video and also subscribe to our channel Financial Radio. Now moving on to the first update we have from SpiceJet. SpiceJet, a prominent airline, and its recent financial developments has been interesting in the market. SpiceJet has announced securing an additional 316 crore rupees funding, bringing its total funds to an impressive 1060 crore rupees. This comes at a critical time as the airline has also revealed plans to reduce its workforce by 10 to 15%. Back in January, SpiceJet received the first tranche of funds amounting 744 crores through a preferential share issue. And just recently on February 21st, 2024, the airline's board approved the allotment of additional equity shares to investors, including Airs Opportunities Fund Limited and LRI India Opportunities Fund Limited. Ajay Singh, Chairman and Managing Director of SpiceJet, expressed confidence in the airline's growth prospects, stating that this significant capital infusion reaffirms investors' confidence and strengthens their financial position for the future. The additional funding is expected to support SpiceJet in pursuing its expansion plans and enhancing its operational capabilities. However, SpiceJet has faced challenges in recent quarters due to financial constraints, leading to the grounding of several aircraft and legal disputes with lessors over non-payment of lease rentals. As of February 21st, nearly half of SpiceJet's 65 aircraft fleet remained grounded, reflecting the airline's struggle amid the turbulent times in the aviation industry. Despite these challenges, SpiceJet remains determined to navigate through these difficulties and emerge stronger with the support of investors and stakeholders. Now moving on to the second update from ITC and Prataap Snacks. Shares of Prataap Snacks have seen a significant surge, nearly up by 14% in early morning trade. The reason is the reports that suggest the ITC, a major conglomerate, is eyeing a substantial 47% stake in Prataap Snacks. The discussions for this potential acquisition were initiated by Secure Capital, which holds around 47% of Prataap Snacks. This move by ITC indicates a strategic interest in expanding its presence in regional markets, leveraging Prataap's strong foothold, particularly with its popular yellow diamond chips and traditional Indian namkeens under the Awadh brand. Previous attempts by Prataap Snacks to negotiate with other industry players like Haldiram's and Bikaji Foods didn't materialize due to valuation mismatches. However, this new development with ITC could pave the way for significant changes in the snack industry landscape. If this acquisition goes through, it will trigger an open offer for an additional 26% of Prataap Snacks, further solidifying ITC's position in the market. Despite Prataap Snacks experiencing a negative return since its debut in 2017, its recent financial reports show positive growth in net sales and net profit, particularly for the December 2023 quarter. ITC's interest in Prataap Snacks aligns with its broader strategy known as the ITC Next, aiming to develop a future-ready product portfolio. With this potential acquisition, ITC could utilize its robust distribution network to promote Prataap's brand portfolio, enhancing its market presence. Now moving on to the third update we have regarding India's economic transformation. India is on verge of an economic transformation, set to become the world's third largest economy by 2027 and a $10 trillion market by 2030. This projection comes from a recent report by Jefferies Equity Research. With a remarkable 10 to 12% USD compounded annual growth rate over the past 2 decades, India has solidified its position as the fifth largest equity market globally. And according to Jefferies, this market cap is expected to skyrocket to $10 trillion by the end of the decade. What's driving this exponential growth is the question arising. Well, it's a combination of factors. continued reforms, reduced market volatility, and the demographic dividend with a consistent labor supply and major contributors. Jefferies highlights the significance of recent reforms, such as the implementation of goods and service tax, which streamlined taxation and enhanced trade efficiencies. Similarly, bankruptcy reforms have led to a significant cleanup of corporate and banking sector balance sheets. Plus, the Real Estate Regulation Act (RERA) has set the stage for a substantial uptick in the housing sector. India's focus on both physical and digital infrastructure has also been instrumental in fostering growth. Initiatives like UID, Unique Identification, Unified Payments Interface (UPI), and Direct Benefit Transfer (DBT) have laid a robust foundation for a thriving startup ecosystem. Speaking of startups, India boasts an impressive triple one unicorns, that is 111 unicorns, with a combined market value of $350 billion, making it the third largest unicorn hub globally, trailing only behind the US and China. Furthermore, India has emerged as a service export hub, generating nearly US dollars of $450 billion annually. This growth is fueled by the superior digital infrastructure and a young, well-educated workforce. Institutional investors are taking note of India's potential. With a return on equity focused corporate sector and a strong institutional framework of regulators like SEBI and RBI, India has attracted significant domestic investment. Moreover, India's consistent growth and external relations policies have strengthened its ties with the Western world, Japan, Australia, and the Middle East, positioning it as a key beneficiary of global supply chain diversification strategies. In conclusion, India's economy ascent is nothing short of remarkable. With continued reforms and a conducive environment for investment, the country is poised to achieve unprecedented growth, solidifying its place on the global stage as powerhouse economy. That's all we have for today. If you really like this video at any point of time, don't forget to subscribe to our channel Financial Radio. Thanks for watching.